Yesterday, I started this this topic, banking institutions, and I told you for the various kinds of banks that exist, not the non-banks, banks. And I told you about the functions of a bank and modern day also activities of banks. Then I gave a brief description of scheduled, non-scheduled banks. That definition exists. Then I went into very specific functions which are general across commercial banks in India. This is with respect to India, of course. Again, special type of activities, extra activities. One of them was the lead bank scheme. I told you about that. It's still running. It was initiated in the year 1969, the famous year 1969, when banks were nationalized in India. Mrs. Gandhi came to power after the India-Pakistan war. Our Prime Minister expired. So, within about 3 years or so, this came. 69 was the beginning of the fourth plan also. So, there were massive nationalization programs going on in India. One of them was this bank. Commercial banks were nationalized. The lead bank scheme, basic idea is there will be a leader bank who will give the leadership to the local requirements of an area, specifically with respect to a district, what the requirements are. So, they have to prepare a district credit plan, and all institutions, concerned institutions, non-banks, banks, whoever they are in that district functioning already, will have a coordinated effort, which is called consortium banking, in terms of helping out the local needs. Essentially, there are credit gaps. You need money, nobody is giving it to you, called credit gaps are there, gap between supply and demand. So, the idea is to fill up the supply and demand gap, which is a excess demand situation. The reason is, of course, banks are profit making organizations and they just do not want to give money to anybody. They would like to check out that if they give money to somebody, there is some return, a profit. But this is social banking. In social banking, you cannot make profit. So, somebody got to help you out. So, often what has been the case, NABARD would give money to the banks to help out the needy ones. So, the banks do not have to take the money from their pocket. Sometimes it has happened. So, I talked about that. Then there were two more programs of RBI that were initiated around that time or later with respect to banks. These are not directly always connected with the lead bank scheme, but they have relevance for the lead bank scheme. The first one, which was initiated in 1985, 1985 is which year? 1985 is coming to the end of 6th plan. Rajiv Gandhi is already there. So, 1985, around that time, the plans were initiated. These are called banking related actions. These are called action plans. So, action plans were initiated. Action plans. What are action plans? This were initiated in 1985. The basic idea here is not social banking like lead bank scheme. The basic idea here is to improve the performance of banks. Banks have been very poorly performing in India. One of the reasons they were nationalized was that the banks which started out as private banks, they were performing miserably. So, government had to nationalize them to save them, because they are not only they are employing a whole lot of people, they are dealing with public money. So, if they go broke tomorrow completely, your money and my money which we deposited in the bank would be gone, and imagine the suffering of the people. So, they were all nationalized, but later they were, this efficiency of banks did not really improve even after nationalization. Some of the banks probably performance became weaker, which is the case with our public sector undertakings, because they were not profit oriented, not performance oriented, not efficiency oriented. Now, Action plans were introduced to improve, essentially the idea is to improve the performance of banks and the quality of banking services, not only performance in terms of how much profit they will make, but also in terms of quality of services. So, these action plans focused on individual issues in an institution, which is true of any entity, a company maybe producing something else. Look at the things they focused on. The organizational structure, that means what? Whether there will be a bank manager at each branch, where there will be a supporting manager also, sometimes called personal bank manager in some of the banks we have today. Who would be above the bank managers in a district or in a state? All right. Within a bank, will there be, I remember when I used to go to bank very early, there used to be something called, somebody called head cashier, not who are manning the cash tellers, there is a head cashier, all right, like headmaster in a school. So, organizational structure they would look at, because it is very important how the things are managed. Customer service, you understand how you attend customers, how you look after them, all right. If you are not looking after them properly, they will go away to other banks who look after them properly, better. So, what you need to do? Deposit mobilization is a very important thing. Banks run their business on the basis of your and my money. So, if your and my money are not going to the banks, how can banks make money? How can banks lend? It's a very important issue. Credit management, my goodness, whom to give money? Credit management. How to recover the money? What will be the interest rate? Sometimes in India, those days, interest rates were highly regulated. So, you have no say on that. If you are giving money to somebody for a small scale industry, this is the interest rate, it's kind of fixed. For a medium scale industry, this is the interest rate. For housing loans, for educational loans, I remember for educational loans early 1980s, I paid an interest rate of about 18% or something like that. Huge amount of interest rate, massive, all right. Then the productivity aspect, how much work you get done, all right, and which are also connected with efficiency, etc., which you know very well. You walk into any office, whether it's functioning efficiently or not, you know that immediately. And of course, all of them together will determine your profitability, final result, end product. If you are productive, you are looking after customers, deposits are mobilized, the organization structure is okay, they all finally result in one thing, that is profitability, definitely. All right. So, how would you manage this? So, the RBI has been continuously trying to improve these functional aspects of commercial banks, either through short term courses, training programs, surprise visits, checks, all sorts of things they do, all right. And of course, within an institution you have to have internal supervision, like you are studying here. It cannot be MHRD sending people now and then to find out whether classes are being held, whether exams are being held, whether students are admitted properly or not, whether the living conditions are good or not. MHRD cannot be, ministry cannot be sending people to do all this. It has to be organized internally. So, internally we need to function better. So, how you make an institution which is not functioning well internally will now function well internally. Amazing amount of work. And this is usually the story of the downfall, the reason for the downfall of public sector units. They internally got mismanaged. Nobody externally threatened them. Internally they damaged themselves. All right. So, internal supervision, training, cost control, modernization, technological upgradation, like computers now have definitely improved efficiency, but it requires a cost. You know, to bring in computer, enormous amount of costs are required. But once the computers are there, the system definitely functions better, all right. And annual reviews of your credit limits, various things. Health coding of accounts, very interesting. Health coding of accounts. So, the accounts of two types of accounts are there. One are the borrower's accounts, where the health coding is primarily done. If they are borrowing money, how frequently are they borrowing money against a loan? The loan is not immediately given the whole amount to you. In case of consumer loan, that happens. But other loan, proper loans, money is not given to you right away. They open an account in your name and they slowly release the funds into the account, and you are also, I am going to talk about that soon, and you are also allowed certain amount of borrowing every month or every week or whatever, and you are also supposed to return money. So, the accounts, health coding means how much the monies are being returned, etc. And from the point of view of depositors' accounts, there are also annual reviews are required, because you know sometimes these accounts sometimes go dry, the minimum balances are not properly maintained, then account holders disappear. Very interesting. Accounts are lying in a bank who deposited some money but never to be seen again. An enormous amount of cleaning up duty is there in a bank all the time. Then to find out whether an institution, which is very important, is performing ill, but you are ignoring it, but are you reaching a red line where you might be declared a sick unit? You know, sick industrial units can be declared sick units. That means it's terribly bad shape, essentially from the point of view of financial performance. So, an industry can be declared, a bank can also be declared a sick unit. So, are you really approaching a point where your performance has been poor for such a long time that now you would be declared a sick unit? My goodness. एक company जो कुछ तैयार कर रहा है, उनका तो नुकसान हो सकता है if you are declared a sick unit. But if a bank declares, if a bank is declared a sick unit, it's terrible news. Bank is holding all your money. Of course, we have safeguards, CRR, RBI, etc. But there is a strain on them to bail you out. Like when a child falls sick in the family, it's an extra work that the parents have to do. It's not a normal situation. So, a sick unit, and in India it's very common. So, these are various things that came under the purview of action plans. Last thing about this kind of a thing, special banking programs that I would mention, which is connected with that a lot with the lead bank scheme. This is called the service area approach. Service area approach. Service area approach, this is very much connected with the lead bank scheme. The service area approach came 4 years later in 1989, and what they did was essentially this. What happened, if you look at the history, banks were nationalized in 69, lead bank scheme with extra duties on banks at the same time. And one of the things in the lead bank, of course, you understand, is to expand, because if there is a credit gap, you have to open a branch which would cover about 4 to 10 villages. Okay? Then you have to do the local study, groundwork at the ground level. What's the credit gap? What's the nature of the gap? Who wants credit? Who are the type of preoccupations you have, professions there, etc. So, over time, with Government of India help and RBI of course, banks suddenly started expanding quite a bit in India. Suddenly branches started coming out, like on a dry land you start watering them and plants, shoots come out, and then they grow into trees and the various branches are there. So, banks started expanding quite a bit. Then they realized the banks are not performing well, with government support they are performing well. Then came the action plans. When the action plans came, essentially they were looking into how to improve the bank performance. Now, they reached a stage where they have now expanded or grown. So, they in the service area approach, the precursor to the service area approach was, now that the banks have increased in terms of branches, etc., and volume of credit. Let's do a survey on selected areas. We do like a random sampling or something of selected areas, districts, to find out how much this bank expansion, a lead bank scheme, etc., have impacted rural development, because one of the objectives there have not been the urban economy, lead bank scheme. The primary objective of the lead bank scheme was to supplement the already existing institutions like cooperative banks, etc., and other banks in terms of required credit gaps in rural areas primarily. Some urban areas, districts do not include only rural areas. So, when you are a leader of a district, urban areas also come into the picture, but the focus has been in the lead bank scheme on the rural areas. So, now they are saying let us see which is 69 and 1985 ke baad. So, it is nearly completing 20 years, and they are trying to do a survey of that how is this now the credit, new kind of credit system and the lead bank scheme, etc., branch expansion has impacted rural development. And following the findings, RBI announced a new strategy of rural lending under the lead bank scheme on 1st April 1989. So, you can imagine exactly 20 years later, RBI announced a new strategy to lend under the lead bank scheme. So, there is a leader and all that structure exists. What is this strategy? What is the objective? The objective of this so called service area approach, which is this strategy, is to improve the quality of rural credit and semi-urban area credit in semi-urban areas through commercial banks and regional rural banks, so that rural income increases, just not the credit gap. You have to give money in a way they are utilized productively, and you have to find out the areas where you should, like there are all kinds of soil, but you do not water soil where no plants can be grown. You look for soil where plants can be grown, the topsoil has some quality left. So, you try to nurture them. So, now the objective is becoming just not a desperate need for rural credit. Now, the objective after 20 years of lead bank scheme is how can we do a credit lending to rural and semi-urban areas, so that the income generation improves. So, these branches of these banks, what they did was, every bank has a branch. I am the leader bank. So, I take stock of how many banks are there in my area, in my district, Kanpur, all right, and non-banks are also there, NABARD, etc. Now, I ask these my partners or members in my group to take up a specific area called a service area that you are going to service. Okay? Say I am asking, I am Bank of Baroda, I am the lead bank of Kanpur district. I ask State Bank, I take stock of State Bank branches, how many are there. Then I ask State Bank, okay, this district is now going to be divided into various areas in terms of talukdas, panchayats or whatever, and you is my partner in this, you take up a service area or I give you a service area consisting of about roughly 15 to 20 villages. Roughly 15 to 20 villages, that is going to be your service area, you would service that area. You go out there, do the groundwork, ground level survey, and all these surveys you prepare some plans for your branch, say State Bank, a branch of State Bank is going to service 15 to 20 villages, and you prepare something called a branch credit plan for your branch consisting or covering 15 to 20 villages. So, you prepare something called a branch credit plan. you prepare a branch credit plan. All right. This branch credit plan which you prepare, a document, you then forward it to your lead bank. So, it comes to my office, I am the Bank of Baroda. You guys prepare the branch credit. You are a State Bank branch, you are a Canara Bank branch, you are some other branch covering some villages. So, I distribute this work, the total district work. This branch credit plan will then be aggregated into block credit plan. So, a block under a district consists of various villages. So, the branch credit plan of branch credit plan, your branch credit plan of his bank branch, together then I will create the block credit plan. Very decentralized planning. This is called decentralized planning. You start at the ground level, not our 5-year plan, which you start at the top and propose a project. So, branch credit plan will give rise to block credit plan. Okay? Now, the blocks which are there under a district, and district make up a state, and state make up the country. You know how it is going. So, block will now create the DCP. DCP is district credit plan. They have now prepared district credit plan for mostly all districts of the country. They are ready and getting implemented. All right. But it taking years to do the district credit plan, and they require revisions from time to time. Enormous amount of work. I mean, honestly, if you have to develop countries, an enormous amount of work. So, if you go to the Western world, one thing you will see, they live well, of course, they have these skyscrapers and lovely highways and excellent eating places and so much of money. But basically, one thing they do 7 days a week, they keep on working. Enormous amount of work, and household work here you can have a servant quarter. उधर में राजा रानी का सर्वेंट क्वार्टर मिलेगा, बटलर आएगा, हाउसकीपिंग करेगा, or you have to live in a hotel. Well, they would do the housekeeping and will cook in the restaurant, you go and eat there. At home, you also do that. So, essentially what they do, if you go to a Western country which lives well, one thing you make sure you are ready for it, you keep on working 7 days a week. And with computer now, you can work from home, which is easier, but you keep on working basically. So, district credit plan. So, you don't develop, you cannot develop a country and say, ah, what a wonderful country, and there is other side of it, oh, what an amount of work. इधर नहीं क्लास में थोड़ा 10 मिनट बाद आए, 15 मिनट लेट गए, रात में 3 बजे तक गपशप किया कैंटीन में, सुबह गए कि नहीं गए, हो गया, वो देश इंडिया ही रहेगा तब, वेस्टर्न कंट्री नहीं बनेगा. No, I am not joking. Look at the amount of work required. You prepare a district credit plan over a year, then you start implementing them. Within 5 years, you have to revise it. Things change. Again, chalo kaam karo wo. So, this is how they approach the service area. It is very important. It is kind of decentralized planning, it is called. At the ground level, you do. All right. So, they are DCPs, and there is a place of monitoring system continuously to monitor the implementation of service area approach. Of course, you have to monitor how it is going. On top of that, all right, on top of that, these leaders, some of them can be very weak. So, somebody is again required to monitor the leaders. So, RBI's work never ends. It hasn't really decentralized all that work. It has, but it's not free, because RBI will, after all, it's its plan, this strategy. So, RBI have to go back again and again and find out whether the leaders are performing well or not, and the units under the leaders are performing well or not. Good company versus bad company. Good company, बहुत अच्छा, RBI को कुछ करना नहीं है. Bad company हो गया. Now you have to do a whole lot of work for them. So, this is it. Now, having said that, now let me come to These 3 schemes I mentioned, lead bank scheme very important, action plans, 1989, this is 1989, service area approach. Now, let me talk about the regional rural banks, how they came into existence, regional rural banks. The RRBs are commercial banks. That means they have all these functions of a commercial, accept deposits, arrange for remittances, give loans, etc., savings account, fixed deposit account and all that. But they do not have these specialized activities, like RRBs do not get into investment banking or this what do you call underwriting business or mutual funds, which commercial banks, the big commercial banks do. Grameen banks do not do that. They do not have expertise also. They do not have the expertise and they do not do that, Grameen banks. And but they do other normal banking activities. So, idea is a commercial bank can open a branch and expand. We have done that. But now, let us create, which they have done, a set of commercial banks which will come up without branches in these rural areas and start functioning. Okay. Regional rural banks. This is most probably without branches, these regional rural banks, and they have a name also. The general name is Grameen Bank. Okay. Now, how they came? These fellows came in the 70s, about 6 years later, 6 years after nationalization. Regional rural banks, probably one of the reasons why they were conceptualized is to carry out the lead bank scheme, they implement the lead bank scheme. So, I am the leader, I have some other my fellow banks, say I am Bank of Baroda, there is a state bank in my district, there is a Punjab National Bank, there is something else, but I cannot force them to open the branches. So, they will do some work, but there is still some work left. So, regional rural banks were created to fill up the void. So, now you guys are created, you do this work, I ask you, implement the lead bank scheme. They came into existence in 1975, and it is interesting how they were created. They were sponsored banks, commercial banks, to develop the rural economy. The paid up capital was only 25 lakhs. Can you believe in 1975 prices were so low? 25 lakhs paid up capital. अरे 25 crore से एक बैंक नहीं बनेगा आज. 25 lakhs है paid up capital. And how it was contributed? This is a ratio very interesting. 50% will be contributed by central government, 15% by the state government. So, कितना हो गया? 65%. And the remaining 35% will be come from the sponsoring commercial bank. So, who is the sponsoring commercial bank? Usually that was the lead bank, who is sponsoring the regional rural banks in his district, usually. But sometimes some other commercial bank can be sponsoring too. Now, sponsoring means giving money, of course, buying the paid up capital, buying the shares, so that the company can be set up called a bank. A regional rural bank is set up through central government giving 50% of the paid up capital, state government giving 15%, and the remaining coming from the sponsoring bank. But the responsibility of the lead bank or the sponsoring bank does not end there. Sponsoring bank may be the lead bank, may not be the lead bank, all right, usually the lead bank. Now, who would be coming? What kind of a job they will have, I am telling you. The sponsoring bank becomes the best friend, philosopher, guide, the advisor of the regional rural bank. It trains also their staff who would work in the bank. RBI used to have training program under action plans for commercial banks to perform well. Now, when a lead bank is sponsoring or somebody is sponsoring a regional rural bank, RBI is not directly coming into the picture. The sponsoring bank will take the responsibility to have the personnel properly trained. All right. Money to diye hi hai. Sometimes regional rural banks would also get a financial help from the NABARD, because it is for the rural area. NABARD is essentially agricultural credit and rural development. So, sometimes extra funds have also come from NABARD. And like regional rural banks, these are commercial banks. So, remember they have to maintain CRR, no choice, and SLR. CRR cash has to be kept. And the way they were set up, they were scheduled banks from the beginning, because government is setting them up in some sense. They provide credit to essentially rural credit to small and marginal farmers, which is the big problem in India. Small farmer को आप कुछ लोन दिया, वो बेचारा भूखा मर रहे थे, वो लोन का आधा तुरंत खा गया एक महीने के अंदर, हाउसहोल्ड कंजम्पशन के निकाल जाते. Maybe 50% remains, then he invests in his field. So, the money never returns, is never returned often, all right, and then there is a natural calamity, a flood or a drought or something, ho gaya. So, this is a perennial problem of Indian rural economy, perennial problem. That is why banks were not interested, that is why government had to do so much. All right. So, there are some farmers, artisans, wo handiwork jo kar rahe, artisans, potter, कुछ जूट का बैग बना रहे, जो भी हो, other handicraft products, all right. And usually these regional rural banks, remember one thing, this people do not understand, often the regional rural banks jurisdiction do not get confined to a district, which is the lead bank's jurisdiction is within a district. When regional rural banks are created, they often start operating across districts. Just like a bank is not confined to a state or a couple of districts. I can have a branch in Karnataka, I may be a UP bank, I can have a branch in Karnataka, I can have a branch in West Bengal, I can have a branch in Rajasthan, in Madhya Pradesh, wherever I want. The regional rural banks, since they are commercial banks, lead bank is a very specific object, a very specific scheme. They may be connected with regional rural banks development initially, were connected with the lead bank's objectives, but their operations were not confined to a district. They can go to Unnao district, all right. So, I guess they can have branches also, which I do not understand, maybe they have branches also. Go to Unnao, they can have depositors. Suppose a regional rural bank is located at the border of Kanpur and Unnao. So, they can have depositors and borrowers from both the districts. They are not confined to, like lead bank, to only Kanpur district. My responsibility ends there. The Unnao lead bank will look after Unnao. It is not that case here, all right. The SPED, and since regional rural banks are really at the ground level, at the village level, and you have this traditional, I have not spoken about them, the traditional cooperative banks, which have been funding rural lending, because there were no commercial banks to help them. So, people developed these cooperative banks on their own with whatever little subscription they could have towards a share capital, but later RBI came up with schemes etc. to support them. But cooperative banks are the dukhi banks, कोई है नहीं हमको help करने का, वो अपना अपनी तैयार हो गया. Now, these regional rural banks are supposed to provide a support to the cooperative banks, because they are at the ground level, and cooperative banks are also doing the same thing, helping out the rural economy, the rural borrowers. So, the lending rates etc. were always at par with the cooperative banks lending rates etc. Not maybe the Bank of Baroda what it charges to the industrialists or the agriculturalists or whatever, or in urban areas. Cooperative banks जो lending rate है local cooperative banks का, वो सब interest rate where are important for the regional rural banks also, because they are like now they belong to the same fraternity, they belong to the same group trying to help out. They are not trying to really compete or out-compete each other, they are trying to help each other out in some ways. So, the objective went like this. Now, in 2006, there were 133 regional rural banks. Now, it is some 89 or something regional rural banks. You saw the data. All right. Now, what I have done is I have given you the broad contours of commercial bank sector, but now I am going to take you inside a commercial bank, like inside RBI I took you. I talked about the money market, but then I took you inside RBI and told you about the connections with the money market and the rest of the monetary system. So, now my next task is to take you inside a commercial bank. For that, I will open their balance sheet, because the balance sheet lists all that they do, not the profit and loss account, the balance sheet. The balance sheet has the asset side and the liability side. So, I will take you into a conceptual framework of commercial banks' assets and liabilities. Some of that you already know, but this will be my next task, to take you inside, and then I will show you aggregate data, scheduled commercial banks aggregate data, assets, liabilities, various heads. This is how I have been trying to teach you this course right from the beginning. You saw that. Okay. So, next few minutes, what you can do is just pay attention to the slide. I won't lecture. I will take it up, maybe Thursday I will call it off. So, I will teach on Friday. Thursday I have morning class, afternoon presentation and all that. So, if you do not mind, Thursday I will take off. I will declare a leave, and Friday I will teach. All right. So, what I will teach is something which is, you are going to now have a look. Next 5 minutes, it is no big deal. I am not going to strain your mind or asking you to go in a hurry. Look at the liabilities of scheduled commercial banks in India. This is what I am going to make you go through. Many of that stuff you know, but now I am formally organizing them. I am coming to the end of the course called Money and Banking. So, you end the course with some banking knowledge, some knowledge about banks. They have three kinds of liabilities. There is a liabilities to the banking system. A bank can have a liability to the banking system. Then a bank have liabilities to others, non-banks, whoever they are. Then you have the borrowings from the RBI, the third group. Every group has subheadings, and you can read the subheadings. These are the liabilities of a bank, of our commercial banks, scheduled commercial banks. So, I need to go through this. Some of this you know, but still I need to explain them. This is the first thing I will do on Friday. Then I will go to the assets. How do commercial banks accumulate assets? All right. So, I am coming to the end of the course. So, I want to give you some more banks now. Because the title of the course is Money and Banking. So, I have done a lot of money discussion, monetary economics. Acha, assets dekho. These are the typical asset structure of commercial banks. Cash in hand and balances with the RBI. 4 items are there: assets with the banking system, investment, and then finally bank credit. Now, I am formal. I am very formal now. I am looking at the balance sheet of commercial banks in India, and I am using their language. And in fact, I will supply data also on these heads directly from RBI site. I got the data. So, 4 kinds of assets: cash in hand and balances with the RBI, assets with the banking system. Various items are there. I need to explain them. Some of them is self-evident. Investment, 2 types: government securities and other approved securities. Bank credit, 3 items: loans, cash credits, overdrafts, 1. Inland bills, purchased and discounted, which you have seen, commercial bills, and foreign bills, purchased and discounted, which you have already seen. Many of the stuff you have already seen, but I am not putting together. So, the course is now getting complete. And the last thing I will do is cooperative banks. I will have a day or 2 on cooperative banks. Fascinating stuff, cooperative banks. Starting 1907, बेचारा कोई था नहीं help करना, अपना अपना शुरू कर दिया. Because they have become very big organizations. They are formally part of the system now. RBI has declared some of them scheduled banks, also cooperative banks, scheduled bank status. Doing very well, but there is a lot of interaction with RBI, etc. I need to explain that to you. So, this is what I plan to do on Friday. This and cooperative banks, and looks like by next week end, Friday, course lecturing may be coming to an end. I need to show you some data, that is it. But I am showing you this to you beforehand, what is coming. So, probably Thursday आपसे मिलूंगा नहीं, Friday मिलूंगा.